Hey, good morning. This is Mayor Valensky with Driving Markets, talking about markets while I'm driving. That's what's called driving markets. Okay, quick caveat, anything said in this piece is only an opinion, not financial advice, not investment advice. And I bet you some of you are very, very happy they didn't take my advice yesterday, that's for sure. So let's look at what happened. So yesterday, inflation numbers came out worse than expected. Okay, so yeah, I got it wrong. Where did I get it wrong? I got it right on the fact that inflation came out worse than expected. And I got it right on the fact that the markets dumped. The markets absolutely tanked. However, this is where I was wrong. The market turned on a sixpence and ended up everything being green. There were green candles and bullish candles everywhere for the market to go up on every asset class. Equities, cryptos, commodities, everything went up yesterday as the appetite came back very aggressively within the financial markets to buy up stock, and everything was bought. Everything went up. All the traders, the investors, the bankers, they just bought up everything as if it's all over. So let's just go dig down into a bit more detail as to what happened yesterday. So when the CPI, the Consumer Price Index, came out, it was worse than expected, as I stated, and the markets dropped significantly. At the time the markets dropped, I put out a further confirmation sell note that the markets are going to fall, and I made it clear where the Dow's going to be by the end of the year, where the Nasdaq's going to be by the end of the year, where the S&P is going to be by the end of the year, where Bitcoin cryptos are going to be by the end of the year, and I was very, very, very certain on that, and I still am. So what changed? Yesterday, the banks began to rise within the falls. As the markets are falling, the banks began to steady in the US and they began to rise, and that pulled up the rest of the market. Now the banks began to rise because there is expected greater profitability on their corporate earnings than expected, and furthermore, with interest rates rising, then banks become more profitable. So interest rates will rise in November and will rise in December. I'm saying by at least 75 basis points in November and 75 basis points in December, maybe even 100 basis points, because inflation really is out of control. But with the banks rising yesterday, the rest of the market got encouragement and everything began to rise. The energy stocks, the retail stocks, the pharmaceutical stocks, everything just went up after the banks began to rise. And the Dow yesterday had a 1,500 point turnaround. It was down over 500 points at the lows and then ended up closing 827 points up. Now that is a classic bear rally. That is a classic bear rally. A bear rally. It's a market rally within a bear market. So one of my colleagues, or one of my good friends I speak to, was goading me last night, was sending me messages saying, yeah, I want to hear what you're going to say tomorrow. Laugh out loud. Bitcoin's going to be 15,000. I'm still sticking to that. I'm still sticking to the fact that the Dow is going to finish the year at 25,000. The Nasdaq below 10,000. It's been practically there, by the way. It's been Nasdaq cash has been around about the 10,300, and the S&P is going to go down and Bitcoin is going to go down to 15,000. I haven't changed my stance. Within every bear market and within every bull market, there's always days where they're down and there's days when they're up. And yesterday was a sharp up. There was appetite yesterday to buy into the market. In other words, it looked short term that it was oversold. It looked like the market had been oversold yesterday and therefore bounced up as a result. But we're still overall in a bear market where the trend is down. Now, until that trend changes, I'm not going to change my stance. And I can't see in the near future what's going to change that stance. Money is going to become more expensive. Liquidity is going to become tighter. China is not there to save us. China saved us back in 2009, 2010, when they bought every available soft and hard commodity around the world, and that pulled up the global economies. There's going to be no all of a sudden quantitative easing and cash flow and printing of money by the central banks. So what is going to push this market up long term? I can't see it unless I'm mistaken. I invite comments and someone to subscribe and say, you know what, May, you've got it wrong. The markets are going to go up and these are the reasons. 1, 2, 3. At the moment, I can't see it. There is money around there, but a lot less than there was last year because a lot has been wiped out. So I'm sticking to my guns that this market is going down. As much as it went up yesterday on a 1 day or 2 day, now today's probably going to go up again, spike, I do think that's an opportunity to sell into the markets based on the reasons I said. No liquidity, higher interest rates, geopolitical issues with Ukraine and Russia. China potentially could invade Taiwan. You've got that. You've got oil rising, OPEC cuts. You've got fears of recession, corporate earnings dropping, and therefore I can see that the market's going to continue going down. But some of the views are, you know what? It's already in the price, and therefore the stock market's reading ahead, reading what's going to happen in 6 months' time. When in 6 months' time, we're going to have interest rates in the States of 7%, in the UK of 5% or 5.5%. So I can't see that happening. Anyhow, so the dollar dropped yesterday against majors. The dollar yen's running at about 147. I think it's going to go to 150 in my opinion. The pound did quite well yesterday and went up to nearly 114 and a bit. So it's trying to claw its way back, but there's still no solid action from Liz Truss, Kwasi, and Andrew Bailey, the governor of the Bank of England. Until that happens, that's going to put pressure on the pound and on gilts. And I still think the overall trend on the euro is down. It's going to go down to around about 92 to the dollar by year end. I've even lowered it from 95 to the dollar, 92 to the dollar by year end. The yen is going to go up. As far as crypto is concerned, Bitcoin is going to go down. Unfortunately, the mortgage market is getting tighter and the interest rates are going up. So those who have mortgages or those who are taking on mortgages, then they're going to end up suffering with that as time goes on, unfortunately, because rates are going higher. The 30-year yield, the 10-year yield, sorry, in the US is running at 3.95%. Just go over that again so I'm clear. The 10-year US Treasury yield is running at 3.95%. It touched 4% yesterday. It's running at 3.95. That's also a very concerning indicator. And the 2-year yield is running well above that. That's inverted, and that is a lead indicator into recession. So as much as the markets get up, you've got to be very cautious out there when you're trading, because markets bounce around. And like I say, specifically to Phil, yeah, you got it right yesterday. Good on you. Overall, the year, as far as I'm concerned, is going down. This is Mayor Valensky with Driving Markets. Subscribe, comment, share with your friends, send it around. Let's get the channel up there and running. Have a good day. Have a good weekend.